Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 13th of November. So the markets are looking quite interesting following the release of US CPI, which came in line with expectations at 2.6% year over year. Initially, we saw the indices go up a little bit, but as you can see, the US markets have now gone down along with the global markets. That being said, we are near record highs, so this is by no means the top of the market, but it does warrant some caution given how weak the rest of the indices have been. In particular, European markets have been quite weak, and the German DAX index today has fallen quite sharply, extending its loss from the day before when it broke some key technical levels, including that 19,245 level, which was the low from Monday. That level gave way yesterday and the index closed near the lows, but it held above this key area of support that had been resistance in the past, such as in May and a couple of other times in September, before we broke above that area. Now that area is key. So this area was tested previously in early October and a few more times this month. But as you can see, the index is on the verge of potentially closing below that area. And if it does, then that would be a clear bearish signal for the markets to watch out for. Now, European markets have come under pressure because of concerns about Germany's political situation. And there are also concerns what Trump's tariffs on China and on Eurozone will mean for European markets. And for those reasons, we have seen European and Chinese markets fall in recent days, as to have the yuan and the euro dollar. Speaking of which, the euro dollar is also looking quite weak after it broke its low that was hit in April, thus creating a new low for the year. And it looks like it could be heading down to 105 handle from here, which is the next psychologically important level. It does look a little bit overextended on the downside, so we may see a bit of a pullback as the European session draws to a close, but the technical path of least resistance is clearly to the downside. In terms of resistance level to watch, 106 is now going to be a short-term resistance level, given that it was previously support back in April and yesterday. So this level is the first area of resistance to watch in the days ahead. Above that, this area, this shaded region between 106.82 to 107 is the next area of resistance. And then above that is the backside of this broken bullish trend line. But ideally, from a bearish point of view, you wouldn't like to see the euro come all the way back to that area now. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.